The Consumer Finance Protection Bureau is suing the operator of Zelle, plus JPMorgan Chase, Bank of America, and Wells Fargo, claiming the big banks failed to protect consumers from hundreds of millions in fraud. Yahoo Finance's own Jordan Weissmann has the latest. So Jordan, how should we be reading this lawsuit, and what does that mean for everyday consumers?
Well, to start, this is a big lawsuit from the CFPB. It's a major action. They're going after three of America's biggest banks for essentially, the argument they're making in the complaint is that these institutions rushed Zelle to market because they were so terrified of competitors like Venmo that they put out a product that just did not have nearly enough fraud prevention and security features that, in fact, just made it extremely easy for fraudsters to get their customers' money. And then to make matters worse, according to the agency, JPMorgan, Wells Fargo, Bank of America did not do nearly enough to make sure people could get their money back. In the lawsuit, they talk about how these banks at times essentially told customers that they should try and go work it out with the fraudster. And if that didn't work, then they should contact law enforcement. So it's a pretty it reads pretty damning in a lot of ways. And in a way, it's also, I guess you could say it's a warning to customers for some of the types of scams that they may need to watch out for.
Interesting lawsuit to continue to monitor. And Jordan, you also got the chance to speak with Rohit Chopra. He's the director of the Consumer Financial Protection Bureau about some of the agency's recent actions aimed at the credit card industry. What did he tell you during that conversation?
So the CFPB has been doing something pretty fascinating in these last several weeks, which is they're just, they're not really taking their foot off the accelerator when it comes to enforcement actions like their lawsuit against Zelle, and also just, their general, kind of activity around industries like credit cards. This week alone, they put out a report essentially criticizing the retail credit card industry for charging extremely high APRs. They put out what amounted to a warning to industry, telling credit card companies not to devalue points and that it was illegal and could attract a lawsuit. And then they also put out this new credit card comparison tool. The idea behind that was that they claim that a lot of the popular sites that consumers currently use are essentially kind of rigged with kickback schemes. So they wanted to do their own version of it. What Chopra told me is that he thinks there's sort of a broad problem right now with price gouging in the credit card industry. His argument is that you've just seen credit card companies' margins and profit margins expand much more than you'd expect based on where interest rates have risen. And a lot of that has to do with the ways they are getting consumers to sort of ignore the interest rates that they're being charged on cards when they're shopping for them, and instead focus more on things like points, which might actually not be that valuable for people who are allowing their balance to, revolve month to month. It was an interesting conversation, and this sort of seems to be the message coming from CFPB right now, is that shoppers need to pay close attention to the APRs, to the interest rates they're paying, which seems to be going further into kind of the back of their minds when they're shopping for credit.
Jordan, thank you so much.
Thank you for having me.